So I'm making this video because I made a similar video for my clients last week when gold started taking a pretty big dip and wanted to explain why. Since then, I've had a lot of prospective customers asking me, hey, can you tell me what's going on with gold? And my business partners, along with some of my colleagues, said, hey, can you make that kind of video for people just looking at gold instead of people that own gold? And I said, sure. So that's why I'm doing this. My name is Drew Yurasek. I am one of the founders and managing partners at the Complete Investor. I also sit on the board at Gold IQ Group. And there's a reason why gold is acting the way it's acting. And I'm going to explain that in detail. A little 20-second advertisement about my company, The Complete Investor, at thecompleteinvestor.net, my website. We specialize in helping people not only protect their wealth, but grow their wealth, and primarily doing that through purchases of physical precious metals. Most people don't know you can actually own real gold coins and bars, real silver coins and bars in your retirement account. It's a tax-free, penalty-free move. You can take any money that you have in a qualifying 401k or retirement account you set up, and again, tax-free, penalty-free, move it into gold. You lose no value. Now, why might you want to do something like that? Well, this is why. We're currently nearing $40 trillion in debt as a country. Every time we borrow money, that the chance of default goes up, not down. Physical precious metals like gold and silver are not tied to our debt. They have their own sovereign value and globally recognized. Also, people don't realize physical precious metals in your retirement account is not taxed the same as paper assets, not taxed the same as stocks, bonds, mutual funds, annuities, or even cryptocurrency. And I'm sure in retirement, you'd probably rather spend less in taxes than more in taxes. But let's get to what's happening with gold. Okay. Well, with the war in Iran, specifically regarding the Strait of Hormuz and the blockage of very vital resources, not only oil, but with recent attacks on Qatar, one of the world's biggest producers of natural gas, you now have two of the most vital energy supplies essentially cut off to Far East countries, the Asia markets. Also, a lot of people don't know this, a lot of the farming chemicals used globally, even in America, come from the Middle East and go through the Strait of Hormuz. So this blockage, this conflict is crippling Asian countries, especially their ability to be profitable. There's even talks, and you might even look up this article, I read it this morning, that countries like the Philippines are looking to go to a 4-day work week to save money on energy. Well, that means that these companies in these countries are not going to be as profitable. So big money managers, big investment firms are realizing they're not going to make the profits they anticipated from their Asian investments. So one of the best ways to make up for these losses is get into treasuries. U.S. treasuries are paying a big dividend right now, right? A guaranteed return, if you will, right? And a pretty good one. If you look at the 2-year, you can see here the 10-year and the 30-year, the rates are pretty high right now. And that money, right, is better than a loss. So money is moving out of gold and into these treasuries and other commodities that we know are spiking, like oil and natural gas. Now, this is a short-term, knee-jerk reaction to a situation that is not going to last forever. Okay? What is going to last forever is the debt we're accumulating at a staggering pace. This war is costing us $2 billion a day. And that's before we commit land troops. If we start putting land troops in country, and they're already talking about sending Marines over, military from Army divisions. I think the airborne divisions being activated to possibly go over there. We start committing troops. That cost and expense is going to skyrocket. And right now we're currently at $2 billion a day. And that's debt we don't have. That's money we do not have. We're currently, as a country, spending 130% more than we make. And gold typically goes up with our debt. Well, if you look at researchers like Ed Yardeni at Yardeni Research, we're supposed to go to $100 trillion in debt by 2030 based on the trajectory that we're at right now. And this, by the way, these numbers came out before this war. Well, if gold goes up with our debt, and our debt more than doubles, shouldn't gold double? And just look at Jamie Dimon's quote a few months ago. He's calling for $10,000 an ounce gold. Jamie Dimon, the CEO of JP Morgan Chase, he thinks that we'll be at $10,000 an ounce gold just based on our debt. And again, this is before this conflict in Iran happened. So is gold a good price? Because that's what this meeting's about. And before I go into that, you can check me out online. On my website, you can see my reviews. Now, these are me putting my reviews online, but I encourage you, check me out online. Drew Yurasek, type in Drew Yurasek Gold in any search engine, and you'll see I only have 5-star reviews. So what I do for my clients, and one of the reasons why I have only 5-star reviews, is I educate. I never push anyone into anything, especially without them not knowing what's going on. So I educate first. And then 2, I support you. I support you in whatever decision you make. And then 3, I make myself available. All my clients have my cell phone number. You can literally reach me day or night, or even on the weekends. But while I give you this advice, or at least my take, I should say, let's go to gold, right? Is this a good price for gold? Well, one of the things I do when looking at valuations of any commodity or investment like a stock, right? I do some technical analysis. Now, I'm going to give you a very rudimentary class right now, quick class on how to do that. Now, so whenever you do technical analysis, you want to grab a chart for the period of time that you're planning on holding the investment. All right. So gold, physical precious metals, I feel you should own for at least 3 to 5 years. Why? It helps take the dip out of, the market, that the dips that might happen in the market. But also physical precious metals are a lot more strategic, right? You're actually taking possession of a physical asset. One of the best benefits of owning gold, right? You're actually holding that asset. And by the way, with technology risks like cybersecurity threats that are growing exponentially almost every day, it's nice to have a physical asset that's 100% insured, right? Instead of a digitally held asset that could be hacked with a click of a button, right? You can't hack a physical gold coin. So I'm using a 1-year chart, but you could easily do this on a 3 or 5 year chart. I'm using a 1-year chart for visual. It's a lot nicer to look at than a 5-year. And I'm going to grab a drawing tool. What you look for is you look for these peaks that fail. Okay. So you can clearly see gold try to reach that $4,300 mark last year and die. Okay, this is a year chart. It tried it again a little bit here, and then it finally broke free. Why is that important? When it finally breaks free of a level of resistance, it becomes support. And that's important to know because if you think about it, it takes a lot of interest, a lot of volume, a lot of people committing to a price to break free of a price where it used to not be able to get above, right? So 4,300 becomes the level of support. So draw a line over here. You can clearly see we're basically at that level right now. And that's important because if we do not go below this level, especially during a huge conflict like the one we have going on right now in Iran, that's a big deal. That shows confirmation that this is a really good level of support. And if you do buy in at this level, the next level up is that really that $5,400, $5,500 level that we weren't able to get above, right? And if we break that level, that becomes the next level of support. So right now, in my opinion, it is a great time to buy, all right? Because again, especially if we have this huge conflict and gold still doesn't break below this $4,300 level of support. That shows a lot of people saying this is a good price, right? Now it could break down below this level. It could, right? We don't know. This war could end up really devastating a lot more people and countries than we even thought originally. The next level down, you can almost see it perfectly here, right? All these times it tried to break this $3,400, $3,500 level, and it finally broke above. That would be the next level down. But if you are looking at a longer term play, like 3 to 5 years, right, this could be a great time to get in, right? And if we do break down, then you basically dollar cost average and buy more. I mean, that's the philosophy you should look at anyway when doing longer term investments. Now, my last comment, and it's a favorite quote of mine, one of the most popular quotes, you've probably heard it before, by Warren Buffett, right? Be fearful when others are greedy. Be greedy when others are fearful. And if you take that advice, right, a lot of people are scared, like, what's going on with gold? Well, that's the time you should look at gold, right? Possibly get in. Now, personally, believe you need to know how to trade options if you don't already. This is an options market. When you have that increased volatility, premiums are much higher in options, which makes the amount of deals you can do in options trading a lot bigger, a lot more opportunity, way more than normal. I am telling you, great options trading market, in my personal opinion. And by the way, I used to work for one of the top options traders in the world. He was famous for taking Amazon.com public as a market maker when I worked out of the CME group here in Chicago. Now, that being said, why is gold acting the way it's acting? We already know. There's money moving out of Asia and shoring up losses, known losses that we'll have in Asia, pulling money out of what they made money on, right? Real gold, and moving it into treasuries, which is pretty much a guaranteed return, at least short term. But again, it does not get rid of the obvious elephant in the room, which is our looming debt, which we won't be able to afford. I mean, there will be a day of reckoning where we either default on that debt or do what's called a great reset. And you can look up that term online. But feel free to give me a call. Again, the link is in the chat to get on my calendar. No obligation. Meet with me. It's up to date. Or you can go to our main site, thecompleteinvestor.net. Scroll down to the bottom here, fill out a form, and I'll give you a call. Thank you so much.